What's up, everyone? We're going to be doing a weekly overview of what we see in the coming week for the S&P 500 and the Nasdaq 100. All right, so looking at the chart, we noticed that on the weekly time frame, we're currently in a downtrend. Okay, we're going to be using our smart money concepts to figure out where we're going to go for the next week and prepare our building blocks just so we have the high time frame setups already, just to give us a overview on what we think the market will, where we think the market will go. So looking at the weekly time frame, we're in a downtrend because we haven't closed above these highs. All right, we did have a strong bullish candle on this week, but that's not enough for our rules to consider us bullish. We need a candle to close above the most recent high, which is this high, and a high consists of a white and a black candle. So if we form a white candle next week and close above this candle, a white candle is just our regular green candles, and the black ones the red ones. So when we get a white candle to close above this high next week, then we're going to switch to being an uptrend according to our strategy. So looking here, we do have this fair value gap that we filled the past month or so. During these 2 weeks, we respected that really nicely. So we are in bearish territory. So we'll be very aware of that. Scaling down to the, we also actually have this daily or weekly high up here. We take the higher one of the two candles that formed the high, and that's going to be our liquidity spot. So we do have this high right here that our liquidity acts as magnets. We're always attracted towards liquidity. So price will most likely want to come sweep this liquidity and possibly continue the downtrend. We could see that this week or next week, who knows? But we play with what we have right now. This is all speculation. So looking on the daily time frame, we are still in a downtrend on the higher time frame, but looking on the daily time frame, we analyze the highs and lows of each individual candle. So these candles formed a high. We dumped all the way down here, picked up a little bit and continued down. But as you can see, unlike the weekly time frame, we closed above this lower time frame high. Well, still the daily, but lower than the weekly. We closed above that high. So we are uptrending on the daily time frame. Okay. So we've pumped a lot, so we're gonna be looking for some form of retracement, most likely next week. So once we close about that high, we're gonna be looking for only bulls because we are in an uptrend on the daily time frame, and we're not gonna be taking trades on the weekly. Of course, we're day trading. We're taking trades on the 5-minute, the 1-minute, hardly ever the 15-minute, but most of our entries are on the 1 or the 5-minute. So we don't really care about what happens on the weekly. We're just doing this as speculation to give us an idea of where price could go for the coming week or even weeks. So on the daily time frame, we've created several fair value gaps. Right here, one right here. We have another one right here. Honestly, we can merge these up and create one big one. And I'm pretty sure this candle might close. Well, this is Monday, so we will have to wait for this one. But we have two fair value gaps right here. I'd really like this one up here. Maybe if it dumps in here, I'd want it to fill below this 50% mark because that would be closer to our equilibrium, which is the 50% mark of the entire move. Oh well, look at that. Look, actually, I'd honestly prefer if it goes to this one. This one might be a little too high. The more confluences we have and building blocks we have coming together, the more likely, more higher probability our setups look. So we might want to see it come down into here. I'll also have this marked off because it doesn't have to always follow all of our building blocks. We might have it just retrace into here and continue pumping. Or we might even have it continue pumping and completely disregard this fair value gap that we drew. Who knows? It's all probability. So scaling down, we might, again, on the daily, we also have this high right here that we might want to sweep as well. And we have this order block that it's never been touched, because our order block is just the move right before the break of structure and continuation towards original trend. So you saw we're originally downtrending, right? So we started pumping, then we came down, and then we pumped again, and we broke structure back down to the downside to continue our higher time frame trend. So this last move before our break of structure would be our order block. You can also consist the order block of this high as well. So we're in that area right now, so we're in very strong bearish territory. So you want to be really cautious of that and what the market looks like when Monday New York session opens up. And we only trade New York session, by the way. The first 2 hours where we mainly get our plays. All right. Scaling down to the 4-hour time frame. Actually, let me look back at the daily time frame. No, we do not have a fair value gap within this entire order block. There's wicks extending out. This was almost a fair value gap over here, but was just enough to not form one. So we'll get rid of this. It's a little cluttered. All right. Recently, I've been noticing fair value gaps to work a lot more efficiently than order blocks. So I'm more so paying attention to fair value gaps than order blocks right now. If I notice that fair value gaps start to work a little less, I might be testing. I might test out order blocks and see if that might be the move. But so far, fair value gaps are doing great. We've been banking off those. Since October 20th, the last 2 weeks, I believe. Yeah, the last 2 weeks or 23rd, we banked really hard, making approximately 6 to 8% on our account. I'll put the profits out somewhere on the screen. We made 68% on our $50,000 account, and it's been doing good. We had about 6 or 7 trades and only one loss. And we also had another loss due to just I was entering a NASDAQ trade and I accidentally entered longs instead of shorts because I was kind of rushing for my position. I was a little distracted and I didn't have everything properly set up and my lot size wasn't calculated. So I was in a rush and I accidentally entered longs instead of shorts. And that caused me to lose a decent amount of money. So, but we ended up banking on that trade, and you'll see in the screenshot that I put in about the profits. So continuing back with our analysis, on the daily time frame, we do have these fair value gaps formed. And since we're in uptrend on our daily bias is bullish. We're most likely going to be playing upside on daily, but we still have to look at the lower time frames. The 4-hour, would you look at that? We're still in a bullish trend. We do have this area of accumulation or order block, whatever you want to call it, down here, and huge fair value gaps that we might want to fill going into Monday market open. So if we hesitate around here going into Monday, I might want to look for a touch into this fair value gap. But if we completely destroy this fair value gap, I might want to look into this one or this order block right here. Honestly, this fair value gap territory looks the best. Again, fair value gaps have been working really well for me, so that's what I'm gonna keep using. The GAN box is again what we use for our equilibrium. If we drag this lower fair value gap also falls within below our 50%, which is we consider our discount area, our discount premium. This is where people would find the buyback price for the dip to be a good value and would want to buy in here, more likely buy in here and continue pushing the price back up. We grab it from the low to the high of the up move or down move, whatever it is, and this would be an example of the down move, right? The high to the low of that move. Right, the black and the white candle create a low. So we would essentially want it to come above the 50% in this case, and that would be a very good discounted price for us to buy. We would use that as one of our confluences, but since it didn't, we didn't look for that. But as you can see, it did tap into this fair value gap it created. Likely, if we switch to the 1 minute or 5 minute, we'll see a break of structure and analyze different building blocks to give us an entry and continue down. But going back to our recent price action, we have this 4-hour fair value gap. We slightly tapped into on this black candle, but it's Sunday and we don't take trades on off-market days. We only take trades Monday to Friday, first 2 hours. This fair value gap is ideally what I'm looking for. We scale down to the 1 hour. This fair value gap honestly is the same. I'm just going to keep it on what the 4-hour looks like. This fair value gap does not look like it was formed. So honestly, I might get rid of this. Just being honest. This is ideally the fair value gap I want us to come fill. This would be a great entry area. And it's slightly within this accumulation area that we formed. So this whole area is honestly just a great rejection area or balance area, whatever you want to call it, to continue price to the upside. We have tapped into bearish territory, so it's not abnormal to see some bearish movement back down there. So that's honestly what we're going to be looking for going into the market on Monday. We'll scale down into the lower time frames for when market's starting to open, because right now we're just look at the 15-minute. Like, you do not want to analyze this movement. So going to Nasdaq on the daily time frame. Let's start on the weekly actually. Actually, let's go to the monthly. We did sweep out these highs over here. We pumped extremely hard and took out these highs, swept that, and dumped a little bit. As you can see, we had a reaction from that liquidity sweep. We are pumping as of November for the last week, and on the weekly time frame, we are in a downtrend. Actually, let me take a look at the monthly. We do have several monthly fair value gaps. As we reacted very well off of that, picked up that month really nicely. That's our only fair value gap we have on this uptrend. Okay, so right now we have these highs that we might want to go up and take out. On the weekly time frame, we're still bearish, and we also had another weekly fair value gap that we also filled really nicely. So this looks like a solid rejection area that we respected very nicely. We also have a mini one down here, but I think we'll just keep that monthly one just to make our chart look clean. We want to keep our chart as minimal as possible. So scaling down, we all have these areas of we all have these areas of liquidity up here that we might want to target on these uptrends that we might have a small reaction off of if we switch this downtrend to continue this uptrend. Because once we entered this fair value gap, you can see how that weekly candle reacted a lot differently than these green candles or white candles on the downtrend. We might be ready to switch up on the trends and continue back up, and likely continue back up and take out these highs and this one up here, and possibly continue pumping. We don't know. This is just our speculation based on our strategy. So this is all we have for the weekly time frame. On the daily time frame, we are in an uptrend. We've been uptrending for the past, we've had white candles all the past week. And again, just like the S&P, we broke above this high. I trade both Nasdaq and S&P just because they both look similar and move similarly, but one might give me the setup and the other one won't. So I trade both just to be able to catch the move, because sometimes S&P might have a good looking setup for me, but we just don't get an entry, and we might get it on Nasdaq. So that's why I like trading both, because you have the probability of catching the move on either chart, and it usually ends up being the same move. Set up my form on one and not on the other. So on the daily time frame, we do have multiple fair value gaps as well, just like the S&P. We have these ones over here. Honestly, we can draw like one massive one, bro. Like that, just like that. Again, I believe this middle zone will be like exactly where our 50% mark is. So yeah, just really close to it. So I'd like to see this fair value gap get filled almost about halfway, maybe even a little bit more. If we fall below the 50% on this equilibrium, that will be a lot nicer. Give us a little break of structure on the lower time frame, maybe even a liquidity sweep or a fair value gap of this on a smaller time frame, and boom, we ride that thing to the upside. But we are again in the bearish territory of the weekly. We have this whole thing right here. We also have this high that we might want to chase in the following days and just sweep this area of liquidity and react and come back down, fill another fair value gap, and continue up. Take out this liquidity, maybe have a small reaction off of that, and then chase after these liquidity zones up here, or areas. So that's what we're going to be watching next week. Scaling